Join me today for an update on the real estate market here in the greater Lafayette area as we wrap up the month of August and head into September. Hi, I'm Geoff Gooch, your local Lafayette real estate resource of choice, and I'd love to help you find home here in the Lafayette area. Please reach out to me. All of my contact information is right here below, or scan the QR code to have it automatically loaded into your phone. So, we're going to get into some deep dive data today, so stick with me. We're not just going to look at week over week and month over month, but we're actually going to take a look back on some year over year data, both year over year from 2024 back to 2023, but going all the way back to 2021. And we're going to look at this data in a lot of ways to see where we are by knowing where we've come from. And there's been a lot of talk about the Fed getting ready to cut interest rates by 0.25% in another couple of weeks here in September. So what happens there is going to influence the market. So we might see some trends now that are going to be influenced by those decisions. But let's take a look and let's dive right in. So we're starting off with new listings. So these are new listings to the market. And in this particular, and in all of these charts, the yellow line represents 2024, and you'll see that they all end here in the middle because as of now, we're just at the beginning of September, and this data ends September 1st. So we see here that as of September 1st, we had 51 new listings, which year over year from last year was a 4.1% increase, the blue line being 2023. So just a tick above, and we can see that we're right on average with the last 2 years, 2022, 2023, and 2024, all within, a margin of error of each other. Now we jump up to 2021, and we're going to see this quite a lot. This 2021 data, the market was really hot after the year of COVID in 2020. So you're going to see these outliers, and then the market kind of comes back down in the years after 2020. So we're right on the trend line, and we can look over the past few months here, and that's exactly where we have been. The trends are about the same. As a matter of fact, the lines intersect back here in March. And we'll see that last year and the year before, those lines rode almost on top of each other. Now, we will still see these numbers trend down, just like they have in previous years, because we're getting into the winter months. And as I say, and if you've watched any of my videos, you know that I say this over and over and over again, the real estate market really follows the temperature outside. As it warms up, the market heats up. As it cools down, the market cools down. And there are some logical reasons for that. People are going back to school, they're getting back into the routines of work in the fall and winter. You have holidays. People just don't want to move in the winter. So we're going to see some trending down. That's to be expected. But what will these interest rate cuts mean? Maybe something, maybe nothing. There are those who make the case that the price is already built in to the market. But there's a difference between built into the market of those that practice in the financial markets and those that are just looking to buy a house. I think it's probably going to have a short-term effect, and we'll get a bump in the amount of activity that's going on here in the Lafayette area. How sustained that activity is, that bump in activity from interest rates cuts, your guess is as good as mine. But I think that we'll generally see the trend line stick. Year over year, coming down here to the bottom, we'll see that we are up 4.1% year over year. The last time that we had last year, we were actually down 2% at this time. So that's positive news. So that's just raw new listings on the market in this time period. Pending sales. These are homes that were for sale, and somebody said, yes, I want to buy that one. Let's write an offer. So these are pending sales. Let's dig into what this chart is telling us. Again, our yellow line, data ending 9/1, so basically the 4 weeks of August, we had 51 pending sales. Year over year, take a look at this. We're down 40. So we were trending up on total number of listings, but we're pretty significantly down on pending sales. Is that a sign of a weak market, that nobody's buying? No, Actually, it's quite the opposite. It is a sign that the buyer's market is actually really strong. It's that there is not enough homes for sale in the market. People are holding onto their homes for many, many reasons. They love their interest rate that they have locked in. They don't want to get into these 6 and 7% interest rates that we've been seeing over the last year or two. As the Fed decides to cut interest rates, I'm hoping to see more homes coming onto the market as people realize that they can indeed move on to their next home with a favorable interest rate, freeing up some inventory in markets around the country, but especially here in Lafayette and West Lafayette, Indiana, and all of Tippecanoe County, and indeed all of West Central Indiana. So we'll see, looking down at year-over-year numbers, that 2023, we were actually up year over year, just by a bit, but we're significantly down this year. Off market in 2 weeks. This is an interesting number. This is the number of homes that go for sale, or rather the percentage of homes that enter the market for sale, and then they go pending within 2 weeks, within 14 days. I preach on this all the time. The market here in Lafayette and West Lafayette, Indiana, in Tippecanoe County is strong. Median days on market are as low as 3 and 4. That is for most homes at $600,000 or less. For homes $600,000 or more, those days on market tend to stretch out a little bit. But let's dive into the numbers and see what we're actually looking at here. So again, the yellow line the data ending September 1st, beginning August 5th, 58.2%, nearly 60% of homes are off market inside of 2 weeks. And look at this trend line going back over this year. It's been hovering around 60% all year long. And if we look back at the same time period in 2023, it was 66%, approaching 70%. So we've actually come down just a smidge, but it's still high. And back in 2022, 50%, 2 weeks or less. So if you want to sell, if you need to sell, you can sell. In Lafayette, Indiana, your house will sell. So down here, we have the percent off market year over year changes. So year over year, we're down about 8.2%. But again, it's a pretty small change. We went from north of 60% to just south of 60%. So a small change, but certainly a little lower than last year. Number of homes sold is what we're going to look at next. In the time period, August 5th through September 1st, 2024, in the greater Lafayette metropolitan area, we sold 45 homes. That is down from last year, where we sold about 50, and the year before, even a few more than that, at 60. But again, let's look at these trend lines, and we'll see that we got a bump here in the summer. It hung out fairly flat through the spring after building back from the doldrums of the winter. This trend line is exactly the trend line that we have seen in all 3 previous years, just the total numbers are less. And again, that is because people are not selling. They're hanging on to their homes because they think interest rates are too high. They know that when they sell, they're going to have to get into their next home, and they don't want to trade out their low interest rate for something north of 5% at 6 or 7%. So again, as the Fed starts to loosen the strings on interest rates, hopefully that will flip. Moving on, new listing median price. If you've been shopping at all for homes in the market almost anywhere nationwide, but especially here in Indiana, in the greater Lafayette area, in West Lafayette, Tippecanoe County, White County, Benton County, anywhere around Lafayette, prices are up. And look at this yellow line for 2024. They're not up a little bit, they're up a lot. Year over year for this point in the year, we are up 18% year over year. The median new listing price, $287. In 2023, we were only up 1.86%, just a little under 2%. The year before, we were up about 15%. The year before that, we were actually down 3%. Again, 2020 COVID plays into that. It's expensive to buy a house. There is no doubt about that. I work with first-time home buyers all the time who have to get funds together to get a down payment to figure out how to get into a house that used to cost $100,000 that now costs $180,000. And it's tough. There are ways to do it. I would love to talk to you. If you're a first-time home buyer, I don't say this to scare you. I have some great partners who know all about first-time home buyer programs, down payment assistance, subsidies from the state. Great programs to help get you into your first home. If you're sitting in a home that you're thinking about selling, this also means that you have a lot of equity. You have a lot of value in your house. So if you're looking to sell, I bet your house is worth more than you think it's worth. Our next one is the median sale price. So we looked at median listing price. This is what people said, hey, I've got my home for sale. This is what I want for it. This is what people actually paid for it. Again, the yellow line is riding high above last year, but not strikingly as much as the asking price was. What does this tell us? Well, this tells me that some people might have a slightly inflated view of what their home is worth, and then they go on the market, and then the market tells them what their house is actually worth. Do they get any viewings? Do they get no viewings? Do they get offers? Do they get no offers? Do they get offers ridiculously under their asking price? That's all a sign that your house is priced too high. And the fact that we see actual median sale prices floating a little closer to year-over-year numbers than median asking prices means that there is some variability in the market. Sellers have the ability to adjust their price to meet market prices if they want to sell. We're only up 5% year over year. At the peak here, we were up about 17% year over year. So yes, 17% is a lot, but we're trending down. The market is telling sellers what their homes are worth. Days to close is our next number that we're going to look at. And days to close, this is your house goes on the market and it sits. People come and look at it. You finally get an offer. You accept that offer. You go through all of the stuff that you have to go through. The buyer getting inspections and appraisals. And finally you get to the closing table and everybody signs their name hundreds and hundreds of times. And the house has transferred to the new owners. So it is from the time that it went on the market to the time that that last name is signed. Let's take a look at this. As of September 1st, median days to close, less than 30, 26.8. So a standard contract to close is 30 days, and so the median is 27. So that tells me that when you get that offer and you're writing it for a buyer who is using a mortgage, whether it's a first-time home buyer's mortgage through FHA or maybe VA, or somebody that's bringing conventional financing to the table, the typical time to close is 30 days. That's telling me that most of the market, a good bit of the market, is using conventional financing. Those that don't use conventional financing tend to be investors and flippers. They might have large amounts of cash on hand or have access to funds that can close quickly, and they can close in 7, 10, 15 days. So if the median days to close is lower and closer to the 10 to 15 day mark, that means there is a lot of investors in the market. If it's closer to the 30-day mark, that means there are actual home buyers in the market. We're at 26.8. There's a lot of home buyers in the market. This, I think, is good news for people who want to buy a home as a primary residence. But we'll see, 2023, the story was about the same, and so was 2022. So the number of investors that are buying in the Lafayette area, they exist, But as a percentage of the totals, it's smaller than you might think, and I think smaller than what the conventional wisdom might be. Continuing on, this one's a mouthful. New listing median price per square foot. When you're comparing houses, it's really difficult sometimes to compare apples to apples. How big is the house? How many square feet? How many bathrooms? How many bedrooms? Does it have a bonus room? Does it have an office? Does it have a dining room? Well, one way to try to compare homes that have features that are diverse is to just do a simple calculation and figure out a price per square foot. It can be an oversimplification in a lot of cases, but it does tell a story. And so this year, as of this point, the data August 5th through September 1st here in the greater Lafayette metropolitan area, we're at about $162 a square foot, trending up towards $163 a square foot. We can see back here earlier in the year, it hit a peak, actually way back earlier in the year, it hit a peak of about $170 a square foot, and it's come down a little bit. But again, we'll see these trend lines kind of match similarly with what we have seen the last couple of years. So I would expect this to trend down a little bit more. What the Fed action is going to have as more buyers enter the market, I bet that number starts to trend up. When buyers enter the market, that means that there are going to be more buyers. There's not going to be enough houses, so the sellers are going to be able to dictate that they want more money for their houses and therefore more money per square foot. So right now we're looking at about an 8% year over year change. Last year was about 1%. The year before it was about a 16%, but again, coming out of 2021. Moving on, number of active listings. And this is for all of the Lafayette, Indiana metropolitan area. Let's check this data out. We're low. I don't think that's any surprise. And this is for the 4-week period ending September 1. 322 active listings. Year over year, we're up 27%. So that's a lot more than last year, but it's not nearly enough. This line up here, 2021, this represents something more of a real normal number, 552 active listings. And even that was down 13% year over year. But this orange line up here is the most real number in 2021 that we've kind of looked at. And we can see the spread between orange and yellow, and it's just way off. There are not nearly enough homes for sale here in the Lafayette and West Lafayette area. Median days on market. I love this number. I talk about this number a lot. Median. This is for all of the greater Lafayette metropolitan area, Lafayette, West Lafayette, Tippecanoe County, out to some of the ring counties. So this encompasses a lot of area. So if you zoom in, you're going to see a much reduced number. When you zoom out, that number grows a little bit. But right now, we're looking at 10.8 for all of this large geographic area. That is a 2% increase, or 2.8 day increase over last year. But look up here in 2021, it was 40. So houses sell fast. If you're in Lafayette and West Lafayette, if you're in the West Lafayette School Corporation, 3 days. So again, this is all of Tippecanoe County that we're looking at here. I believe also some of Benton County and White County and the collar ring counties around Tippecanoe County. This is where we get that 10 days. But if you zoom in to West Lafayette School Corporation, 3 days. Either way, it's lightning fast. So if you want to sell a house, you're not going to have to wait. If you want to buy a house, get pre-approved, period. If you're not pre-approved, you're not going to win an offer on a house. They're not even going to look at an offer on your house if you're not pre-approved. Price drops is always an interesting number to look at. It tells a story. I think it mostly tells a story of people who think too much of the value of their home and aren't necessarily willing to listen to the experts who try to advise them. Percent of listings with active price drops, only 7%. Does that surprise you? I feel that number is a little soft right now, but that is what the data says. We've seen quite a few price drops recently on the higher end of the market, so that might be why the number is so small. When you're talking about higher end versus lower end, I'm talking about the split being at about $600,000, and the number of homes at $600,000 is way more than the number of homes at $600,000 and over. Those homes that sit at $600,000 and over, I've seen some price drops. The homes that sit at $600,000, they sell for what they ask for, and in some cases they sell for more than what they ask. It is a hot market out there. So 7.7%. It's actually a 0.5% drop over last year. But again, we can see we're living in this same neighborhood, and the trend lines, we had some divergence back here. But look at this trend line here. It's right on the average. Months of supply. Again, I feel this number is a little strong, a little stronger than it should be. Right now we have 7.2 weeks of supply, less than 2 months, a month and a half basically. It's growing, but it's nowhere near close to where it should be. We should have about 6 months of supply on hand. Next, we go to average sale to list ratio. This is the number that I was talking about earlier. How much did you list your house for? How much did you sell your house for? Those are two different numbers. Right now, it's almost 100%. 99.05%. Almost 100%. This line right here, the 1 is the 100% line. It's been hanging out between 99 and 100% since March of this year. And at its low point, it was only at 97%. So again, price your house right. If you price your house right, you're going to get it sold quickly. Finally, for today, we're going to look at median sale price per square foot. And it's hanging out right at about $166. About 6% up over year over 2023. And we can see this growth over 2021. It's just growing and growing and growing. And again, we've got this Fed rate cut coming up in September, most likely. What's that going to do to the market? Well, I'm really hoping that more homes are going to come on the market for sale, that it's going to increase our inventory. However, at the same time, the number of buyers are going to increase as well. So everything is going to increase. Prices are going to increase. Days on market are going to decrease. Number of offers are going to increase. So everybody's waiting and waiting and waiting. But maybe the thing to do isn't to wait. So I'm Geoff Gooch, your local Lafayette real estate resource of choice with the Russell Company powered by App Properties. And if you're looking for a home in the greater Lafayette area, whether it's in Lafayette or West Lafayette, all of Tippecanoe County, in Benton County or White County or Carroll County, I would love to be your resource of choice. Please reach out to me. My contact information is right here below, or scan the QR code. And I'll talk to you next time.